Hello and good afternoon. We are here with all the important topics right before the U.S. stock market rings the bell. Yandex NV, the leading technology company in Russia, commonly referred to as Russia's Google, has announced a monumental sale of its Russian assets to a consortium led by Russian investors, including a fund linked to oil giant Lukoil, for a total of 475 billion rubles, $5.21 billion, in a mix of cash and shares. This strategic divestiture, which includes a significant mandatory discount to fair value as required by Russian law, signifies Yandex's dramatic shift away from its Russian operations, which account for the lion's share of its revenue, and marks a pivotal moment in the company's history as it seeks to navigate the complexities of operating amid geopolitical tensions. The sale underscores Yandex's effort to exit the Russian market, which has become increasingly challenging since Russia's invasion of Ukraine in 2022, and reflects the company's intention to distance itself from its Russian origins while retaining a selection of early-stage international tech projects and a data center in Finland. This move, aimed at preserving shareholder value and ensuring regulatory compliance, represents one of the most significant corporate restructurings in the tech industry due to geopolitical factors. Boeing Company has encountered a new manufacturing challenge with its 737 MAX jets due to improperly drilled fuselage holes, impacting about 50 undelivered aircraft. This issue, originating from a supplier, necessitates significant repair work, potentially delaying near-term deliveries of the critical jetliner. Although Boeing's commercial chief, Stan Deal, did not specify the supplier, Spirit AeroSystems Holdings Inc. acknowledged the problem and committed to conducting the necessary repairs. This setback adds to a series of manufacturing concerns for Boeing, which has faced increased scrutiny from the Federal Aviation Administration, FAA, and a production cap on the 737 MAX due to quality control issues. These developments have contributed to Boeing's shares dropping 1.6% in pre-market trading, marking a 20% decrease through the year, positioning it as the worst performer on the Dow Jones Industrial Average. The discovery underscores Boeing's ongoing struggle with supply chain and quality assurance problems, emphasizing the company's commitment to delivering defect-free airplanes despite the operational and financial hurdles these challenges present. Vodafone is actively seeking strategic options in Italy, rejecting a merger proposal from Iliad in favor of exploring other avenues, such as a potential deal with Swisscom's Italian unit, Fastweb. Despite maintaining stable service revenue growth at 4.7% in the third quarter, Vodafone faces challenges, particularly in Germany, where growth decelerated significantly, and in Italy, which remains its most difficult market with a service revenue decline. These developments come amidst broader strategic moves by Vodafone, including a merger in Britain with Hutchison's 3 and the sale of its Spanish operations. Shares of Vodafone have dropped 25% over the past year, reflecting investor concerns over its performance in key markets. CEO Margherita Della Valle highlighted the company's steady revenue momentum in Europe and Africa, driven by business customer demand, while also noting ongoing discussions in Italy and progress in UK and Spain transactions. Despite Vodafone's optimism and reiterated full-year earnings guidance, analysts remain cautious, expecting slightly lower earnings and cash flow than the company's forecasts. This is all we have for you today. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.